Dividends for passive income is absolutely amazing, but the problem is that most dividend paying companies or ETFs, they will only pay you every quarter, which means that you get dividends every third month. So what I wanted to find was the 3 best monthly paying dividend ETFs, and that is exactly what I have done in today's video. But in case you're new to the channel, then my name is Casper, and here we strictly talk about investing and financial freedom. So if you're on a journey to retire early and you really like investing, well then press that subscribe button below. But without wasting any more time, then let's jump straight into the first ETF on my list. So the first one on my list is WisdomTree High Dividend Yield ETF, ticker symbol DHS. This ETF here seeks to track the investment results of the high dividend yielding companies within the US equity markets, with exposure to some of the highest dividend yielding stocks in the US. This ETF here has more than $1 billion of assets under management and an expense ratio of only 0.38%. And that means that for every $10,000 that you have invested into this one ETF here, well then you have to pay $38. But let's get into some of the most important things when you're looking for a new ETF, and that is the number of holdings they have, what holdings they have, and the exposure that you get. This ETF here has 381 companies in total, and that basically means that you get exposure to a lot of different companies by buying this one ETF here. And when looking at the list of their top holdings, we do see some big and well-known high-quality dividend companies like Exxon, Abbey, Chevron, Altria Group, and so on. And when looking at the sector breakdown, we do see that this ETF has the largest exposure to the energy sector, and that accounts for almost 22% of their entire portfolio. And that is then followed by financials, which account for 17.5% of their entire portfolio. Overall, then they do have a pretty big exposure to energy stocks, and I would have liked the diversification to be a bit more evenly spread amongst the top sectors. However, when looking at the performance of the fund, we do see that they are down by 12% year to date. But when looking at the performance over the last 5 years, we do see that they are up by 31.5%, and that is pretty nice. The performance during this year has been pretty bad, but that is the case for most dividend paying ETFs out there. However, when you're looking at the long-term performance, then it should provide a positive return, and this one does, and it has a pretty good return over the last 5 years. But let's have a look at their dividends, because that is the reason why you should buy this ETF here. They have a dividend yield of 4.47%, and that is really nice. They also have a 5-year growth rate of 7%, and that means that their dividends have on average grown by 7% per year for the last 5 years. However, when looking at the history, we do see that over time, the dividend has increased a lot. However, there was a drop in 2021. Overall, then is this a really solid monthly paying dividend ETF, and it is one of the most popular monthly paying dividend ETFs out there. They have been really good at increasing their return over time, and they have also been really good at increasing their dividends. The price for this ETF is currently down year to date, and that could indicate that if you have been looking to buy a monthly paying dividend ETF, well then this one might not be the worst one to buy right now. But moving on to the second monthly paying dividend ETF, and here we have the Invesco S&P 500 High Dividend Low Volatility ETF, ticker symbol SPHD. And this ETF here is based on the S&P 500 High Dividend Low Volatility Index and has at least 90% of its total assets in common stocks that is placed within the S&P 500 index. In other words, then it means that the majority of this company's funds are placed within the S&P 500 index, and they are placed within companies that historically has given investors a really good dividend and that has a low risk. The fund has $2.8 billion of assets under management, and they have an expense ratio of 0.30%, and that means that you have to pay $30 for every $10,000 that you have invested into this one ETF here. But let's have a look at the holdings and the diversification for this ETF here. They have 52 stocks in total, with largest positions in big and well-known dividend companies like AT&T, Verizon, Altria Group, and so on. And when looking at the diversification, then we do see that the utility sector is the biggest one, and that accounts for 17.5% of their entire portfolio. And that is then followed by real estate of 16%. Overall, then is the diversification for this ETF here, in my opinion, better than the first one, because they're not reliant on a single sector, However, it is more evenly spread out amongst the top 5 sectors. But let's have a look at their performance. And year to date, they are down by 14%. And when looking at the last 10 years, well, then we do see that they are up by 34%. So the performance here is actually really good for a low volatility ETF. We can't really expect any crazy returns when it doesn't really have any risk. It is an ETF that is supposed to slowly grow and give you a high amount of passive income. So let's have a look at the dividends. They have a dividend yield of 4.85%, and that is very, very high for an ETF. And they also have a 5-year growth rate of 2.5%. And even though that is not much, then it is still pretty good when you consider that they already have a very, very high dividend yield. And when looking at the dividend growth for the last 10 years, we do see that they slowly but surely grow their dividends. But they're not very consistent with increasing their dividends. However, over time, they do increase. Overall, then is this a really solid ETF. They are giving you a lot of passive income because they have a very, very high dividend yield. And at the same time, then it is a very safe and reliable investment. They are not growing that fast. However, over time, they do grow. But the goal of this ETF is to give you a lot of passive income every single month. And they definitely do succeed when it comes to that. So moving on to the last and my personal favorite monthly paying dividend ETF. And that is the JP Morgan Equity Premium Income ETF. Ticker symbol JEPI. This is a very large ETF that has gained a lot of popularity amongst dividend investors since the inception back in 2020. And right now, they have more than $28 billion of assets under management. And that makes it one of the biggest dividend ETFs on the market today. They also have an expense ratio of 0.35, and that means that for every $10,000 that you have invested, well, then you have to pay $35 per year. They have a total of 134 holdings with top positions in big and well-known American companies like Microsoft, Amazon, MasterCard, and so on. The fund has the biggest exposure to the technology sector, and that accounts for 17% of their entire portfolio. And that is then followed by healthcare of 14.5%. However, it is a very well diversified ETF. They don't have a single dominating sector, and you basically get equal exposure to the top 5 sectors. And that is exactly what you want as an investor. And when we look at the returns, well, then they're down by 4% year to date. However, since this ETF was created back in 2020, they have given investors a total return of 42%. And that is really, really good. And it is by far the best performing ETF on my list today. But let's have a look at their dividends as well. They have a dividend yield of almost 10%. And that is extremely high. However, there is a bit of limited data here as it is a very, very new ETF. However, they have a yield of nearly 10%, and they have somehow managed to increase their dividend yield for the last 2 years in a row. And when looking at this graph, we do see that JEPI increased their dividends significantly from 2021 to 2022. So it will be very interesting to see if they can keep up with this dividend here in 2023 as well. Overall, then is JEPI a really interesting monthly paying dividend ETF. They have a very, very high yield, and at the same time they're giving investors a really good return. You basically get the best of both worlds by investing into this one ETF here. And that is exactly why it is my favorite monthly paying dividend ETF. That was all I had in today's video. Let me know in the comment section below if you have any ETFs that are paying you on a monthly basis. I hope that you enjoyed today's video, and if you did, then don't forget to smash the like button below and subscribe to my channel for more weekly videos just like this one. See you guys in the next one.